Do you know what I find funny? And this is why I do not listen to any other trader on YouTube. And that is when I am listening to an institutional trader on how they trade, it is the complete opposite when a retail trader is telling me how an institutional trader trades. It's the complete opposite and it doesn't make any sense. That is like saying, if you want to learn how I trade, you would listen to me. You're not going to listen to somebody else teaching you on how I trade, because again, that wouldn't make sense. If you want to learn on how I trade, you would listen to me. So what I'm going to do in today's video is show you a technique that an institutional trader does on the charts and how they trade, which an retail trader doesn't tell you how that institutional trader trades. That doesn't make any sense. Honestly, I've confused myself. I've rehearsed this so many times. Basically, what we're going to do is we're going to watch a short video on how an institutional trader trades, and then we're going to replicate that on the charts, and you'll get a better understanding, which is the opposite on what a retail trader would tell you how an institutional trader would trade. Finally, I've said that. So enjoy today's video.
It's always looked upon as negative, certainly at the retail trader level. Institutional traders are taught from their first day that they buy good levels or they don't buy at all. Unfortunately, most retail traders will wait for some confirmation before they get in. That could be a candle pattern, could be a moving average cross, or whatever. Institutional traders will buy at the level. Now, most traders will put their stop loss a tick under the last low, and they will invariably put their stop loss at exactly where the institutional orders are. I think that institutional traders are just doing what institutional traders do, putting their entry points at very good levels. However, if you are trading at the institutional level, it's not always easy to get filled. At the retail level, if you want to buy 100 shares, you want to buy the pound against the dollar at a 5 or a point, you press the little button and you've got it. At the institutional level, it's not that simple, and you've got on occasions to actually generate the liquidity to get aboard. I don't think that anybody looks at where the stops are, but they will say to themselves, well, we know pretty sure that most of the stops will all be crowded around this obvious level. So they will bid the market at that particular level. All you need is one person to chicken out, and the markets are going to go where the bids are, and all those people will be taken out. If you do not think long and hard about where you're going to put your stops, that you're going to find that you can quite easily die in a sea of stop losses. And here's an exercise for some people. The next time you're just about to put a trade on, you pick up something heavy and you just go poof. And then you write down on a piece of paper where you were going to buy and where you're going to put your stop loss. Don't buy it, but put an order in to buy it at where you're going to put your stop loss, and then just watch how many times the market goes to your order. Markets will go to the obvious stops most of the time, and one of my rules is that I want to put my entries where the masses put their stops. If you don't get in at a good level, there's nothing that upsets me more than a guy saying that this is a very risky trade, I'll use a tight stop loss. That's just rubbish, because you'll get stopped out over and over and over again. The stop needs to be where the stop needs to be. So if your entry is sloppy, then your stop loss is going to have to be a red bus away from where you got in at to give yourself a chance of staying in the move. The average true range will help with that. Most traders will look at a stop loss of 2.5 times the average true range or something like that. Nevertheless, if you want to get in with low stop losses at institutional levels, you've got to be brave. The institutional traders will use Fibonacci levels, they will use trend lines, they will use simple horizontal support and resistance levels to actually look for confluences to try and place their orders. Nothing clever, okay? Unfortunately, most retail traders, as I say, will look for some form of confirmation and their stop loss will then be too close and they'll get taken out in the north.
How fascinating was that interview? Now, before we jump on the charts, let's just do a quick recap of what he said. He has confirmed to us that institutional traders are actively using support and resistance, the average true range indicator, Fibonacci retracement levels, and trend lines. They are actively using those to find structure on the charts where they want to buy and sell from. Institutions are also buying at the right level, at levels, okay? Like he says, we are taught to buy and sell at the right level, or we don't buy or sell at all. Now that's funny because that confirms what he was saying on retail wait for confirmation. So retail will wait for perhaps an engulfing candle, a change of character, a moving average crossing over, or whatever. And then what retail do, as they've waited for that confirmation, they put their stop loss exactly where the institutions are buying the market. So what happens? They get stopped out. Like what he says, institutional traders are fearless. They buy at the right level, which means they can put their stop loss out of the way. They don't wait for confirmations and use tight stop losses because that just doesn't work. You're going to get stopped out. Now, I'm going to show you now a simulated example of exactly what that basically happened. Basically, I'm just going to show you a setup on exactly what that institutional trader was saying, and you'll get a better understanding on how they trade and how you can avoid being stopped out and how you can buy and sell at the right level. And trust me, it will blow your mind. So let's jump on the charts. So on my charts in front of me now, I have the binary destroyer on Euro USD on the 5-minute time frame on the left, and on the right I have Euro USD 1 hour time frame pure price action. Now I'm not saying you need the binary destroyer, I'm just showing you how I trade based off the facts that I've now been told from that institutional trader. Now, I always get the question, right, or comments on, you can't get a 100% win ratio, or why do you always make these claims you have 100%, right? I am showing you how I trade based on what we've just learned from that institutional trader, okay? And just to show you, right, because I will get it, but I want to show you, these are my current results for the week, okay? So you can see here, I've done some trading already today with the BD members. Today's date is the 12th of July, so I've done my trading with the BD members today. This is currently the week, okay? And if you have a look for the last 3 months, you will see all of my results for the last 3 months. 1 loss, 2 loss, 3 loss, 4 loss, 5 loss, 6 loss, okay, 6 losses, okay, there you go there, okay? Now, I'm not showing you this to show off, I'm just showing you that if you listen to how institutional traders trade and you pick up the little information and facts and you implement the same logic on how they trade on the charts, you can get very good at trading. And it's simple. As that institutional trader said, it's not hard, it's not complicated, it is just simple trading.
Banks will use simple horizontal support and resistance levels to actually look for confluences to try and place their orders. Nothing clever.
So, let's begin. Okay, so if we look at the 1 hour charts, right, I'm going to mark up 2 significant levels, right, that I can clearly see. I see a level here and I see a level at the top as well, okay? So there you go there. So I have marked up a level, okay, if I just maybe drag it across. Yeah, okay, there you go there, okay? There's a very good example. If I just hold on. Yeah, as I was saying, okay, so I've identified a level, a clear support area. I can see it, a number of touches, great, okay? So I've identified a level that I want to buy from if price comes down to this level, okay? So that's it. Okay, that's it. 1 hour time frame, I've marked up my level. Now, I know roughly what happens, okay, because I'm showing you an example of what I'm trying to confirm. So I had to kind of find this setup. So don't tell me that, oh, I'm cheating because I know the outcome of this trade. Of course I know the outcome of this trade. I'm showing you a trade and I'm confirming exactly what kind of I'm doing, how I trade live and what the institutional trader is saying. So as price comes down into this level here, right? Hang on here. As price comes down into this level, okay? Hold on, let me get you here. Here we go here. Right, so as price comes down into this level now, so we've just confirmed as price comes down into the level, right, I've now got exactly how I trade, okay? For me, this is my Mogwai strategy. So I've got a Mogwai signal, MACD oversold, which is great. And in fact, I've actually got a nice bit of diversions. It's very slightly, but I've got a nice bit of diversions just there, okay? So I've got a Mogwai signal, the MACD's oversold, we're at a 1 hour support line, and not only that, I'm buying right at this level. Now, if you watch my videos and you follow me, I always buy and sell at the right level, which means I can get my stop loss out of the way. So to give you an example here, I'm going to take this trade, I'm going to put my stop loss out of the way, okay, because that's what the institutional trader told me to do. So I'm going to put my stop loss below all the down these wicks here. So let's go with a 40 pip stop loss, 80 pip take profit. So look at that, right? My stop, in fact, yeah, there we go. If we look at the 1 hour charts, my stop loss is way out of the way. This means, right, if price is now to come down, perhaps take out liquidity, right, my stop's fine. In fact, just to confirm it, right, because it is perhaps a little bit too tight, let's go with a 50 pip stop loss, 100 pip take profit. So now my stop loss is even better. It's in an even better position, right? It's even further down, right? It's protected. I'm not going to get stopped out, okay? And if I do, then it's a loss, right? But I've only lost 1%, so it doesn't matter, okay? I don't know. In fact, to tell the truth, I don't even know if this trade is going to go 100 pips, okay? I haven't simulated that far, so I won't know. I don't know. And that is true. Honestly, I don't know. If we look at now the price action around this, so let's go to the 5-minute time frame now, and let's do what a retail trader would do. A retail trader would wait for a confirmation, perhaps a change of character. So there's the previous high, okay, in the 5-minute time frame, and this would be the previous low. So what retail traders are taught is to perhaps take a buy once we get a change of character on the 5-minute time frame. So let's see what happens, okay? Perhaps you could take a sell from here, thinking it's with the trend. Well, you'd be stupid because obviously everyone's buying off the 1 hour. So let's see what happens off the 5 minutes. Okay, so price has come down. Okay, we're still in a trade at the minute. Okay, it's again bounced right off that 5-minute resistance. So perhaps we are going lower. Okay, we now have a change of character. Okay, we now have a change of character. Now, if you are quick, you are going to be buying from this level here, because you would see here, right? You see how you've got you can see how we've got an uptrend, pull back, uptrend, higher high. See that there? And now everybody buys this break and retouch. So what we've got here is a break and retouch just there. So, okay, let's buy the market there. What we're going to do, well, we won't actually physically buy, but this is where retail are buying. And look what's funny about this. Look what's funny. If a retail buys here, where are they putting their stop loss? They are putting their stop loss just here, exactly where my entry point is, because we are still in a trade, right? As price comes up now, right? There we go there. Now it comes back down to this level, and if people weren't quick enough to buy here, they're now buying at this break and retouch, this second break and retouch. So again, everybody is now seeing this and was like, okay, this is the change of character. This is clearly going into an uptrend now. So let's buy the market. We've got a 1 hour support line. We've got a break and retouch on the 5 minutes. I'm going to be putting my stop loss. I'm going to be buying it just here. I'll put my stop loss down here somewhere. Okay. And, you know, this is exactly what you should not be doing. Right. And look what happens. Oh, look, it starts drawing in liquidity. Bang. Stop losses get took out. Now, what's funny is look at me. Look at me. My stop loss is way down here. I'm already in the market. I'm already in it. Right? And where your stop loss is and where you are getting stopped out is exactly where the institutions are putting their buy positions. when you actually see it live on the charts, it's like, why am I doing that? Why am I waiting for confirmation? Why don't I just build up a bit of confidence, start to learn my support and resistance levels, and I'll buy right at the levels? And I've been saying this a lot recently with the BD members, because sometimes they'll wait for confirmation, and I say to them, sometimes it's very bad to wait for confirmation, because you are buying, the further price gets away from a support line, the worse place your stop loss becomes. There's a prime example. Your stop loss is literally exactly where I'm entering the market. What happens now? Okay, it keeps drawing in liquidity. Okay, let's see what happens. And now hopefully we go up. Hopefully we go up and we win our 100 pips. Hopefully. Okay, same again here. Right, same again. Just want to show you something. If I zoom in now, right, look at this break and retouch just here. Same again, right? In retail are buying break and retouches here, and bang, getting stopped out all the time, getting stopped out. And this is why I say, get your stop loss out of the way, right? Buy and sell right at the levels and get your stop loss out of the way. My stop, like I said, look where my stop loss is now. It's way out of the way down here. And I'm still giving an example here, right? I've just made, hold on here. Again, you got another liquidity sweep. Hopefully we win 100 pips. Okay, that's nice. Okay, you see here, I've now made, hold on, hopefully we win the trade. Let me see if we win the trade first. Okay, nice. Let's have a look at the 1 hour charts. Okay, hopefully we come up here. Nice. Okay, nice. Now, see this? I've made 1.62%. So I've already made over a 1-to-1 on this trade. Now, the question I need to ask myself is, should I hold this trade for a 1-to-2, or should I close it off at a 1-to-6? Now, this is where more, you know what, more confidence or just looking at overall price. Let me just see what happens, right? I just want to see what happens. Okay, so price is starting to, hopefully we come up. Okay, here, right? You can see now I'm starting to get a change of character. Can you see how price is starting to come down now? Okay, so here I'm using a change of character as my exit point rather than my entry point. Okay, if that makes sense here. Now you could do a number of things here, like move your stop loss to break even, close off a percentage of the trade, you know, to just kind of confirm that. What I'll do is just to show you, I will close off a percentage of this trade. So I will go to trade, I will close off a percentage of it. So let's close off 0.9 lot. So close, done. I've already banked some profits. Let's now move, apparently, hold on here. Am I still in a trade? No, apparently it didn't do that. Okay, it didn't do that. Okay, so I don't know how to do this, right? I don't know how to close off a percentage. But let's just hold the trade. Normally I would close it off there, but just for the purpose of it, we will hold the trade to see if I get 100 pips. Okay, nice, there you go there. I got 100 pips. I got 100 pips. Here's another example here, right? Look at the 1 hour charts. Look, we've now come up to another area of resistance. Look at that. This was that resistance level just, if I zoom out now, just there. See that? So again, I'm going to buy, let me rephrase that. I'm going to sell at this right level. I'm going to sell right at this level. So let's go back to the 5-minute charts. Have I got a Mogwai signal here? Hopefully we do, because then it meets everything of my strategies. Oh, perfect. Perfect. Beautiful. I'm happy with that one. Okay, so same again, right? I'm going to sell right at this level here. I'm going to sell right at level. Just wait for that TCA line to cross. Watch this. I'm going to sell right at this level. So same again, 30 pip stop loss. And we'll go for a 30 pip take profit. We'll go for a 1-to-1. Look at the 1 hour charts. Look where my stop loss is. My stop loss is way out of the way. Same again, way out of the way. I've sold right at the level. Now let's go to the 5-minute time frame and let's see if I win this trade, right? So I'll do this slowly, okay? Now what's interesting is you as a retail trader, hopefully I win this trade. Please win, come on. Oh, this is annoying. Nice. Beautiful. Beautiful, beautiful. Now, what's interesting, right? Watch this. Can you see how retail traders, right, are starting to sell at this level here? And they'll think, right, it's going into a downtrend now. Lower lows, lower highs. It's clearly going into a downtrend. So where are the stop losses? Of course, the stop losses are here. Institutions know that. Now, I've already made money off this trade. I'm already in and out before you even consider selling because you're waiting for a confirmation. Let's see if this area gets took out. Okay, no, okay, draws in liquidity as well. Okay, maybe we're going to spike up, take out liquidity and drop. Again, I don't know if this is going to happen. I haven't simulated this far. Okay, looks like perhaps another... There you go there. Bang. Bang. Look at... How did I know that was going to happen? How did I know? You see, I am already in and out of the trade because as everybody starts selling here and they see this area of resistance, everybody knows that stop losses are going to be here. Now, if you were brave like me, you would have just sold right at the level. You would have got in and out before retail even considered selling, right? So I'm going to wrap that up there. 3% made. What I want you to take note of is, first of all, start to learn your support and resistance levels. Start to mark up your structure. Build up the confidence to buy and sell right at the levels. Build up that experience with getting your stop loss out of the way. Try not to wait for confirmation because the more price moves away from your level, the worse your stop loss is going to be. And if your stop loss is not in the right place, you're going to get stopped out. Like that trader said, what did he say about... he hates nothing more where a trader would say, this is a risky trade, I will use a tight stop loss. If you're going to use a tight stop loss, you're just going to get stopped out. So, hope you enjoyed today's video. My name's Jamie Palmer, and yeah, thank you for watching.